Hello, everyone, and welcome to this episode of the Chocolate Life Live. My name is Clay Gordon. I'm your host and your moderator. I'm also the creator of the ChocolateLife.com, and I want to welcome everybody who's joining me today. While you're here, please go into the comments, whether you're watching on YouTube, LinkedIn, or Facebook. Let me know where you're connecting today, from where in the world, not whether you're logged in from YouTube or LinkedIn or Facebook, but if you're connecting from somewhere in the US or from somewhere in Latin America or somewhere in Europe or Africa, just wherever are you in the world, let me know where you are connected. I'll get your comment up on the screen. I'll do a quick shout out to people who join the live stream. And also, of course, if you have questions, you put them in the live chat in YouTube or in the comments in LinkedIn or Facebook, and we'll get to answering your questions during the live stream as well. Today, we're topping still yet another fairly controversial topic. I seem to have been leaning into things associated with news and politics and the economics of cocoa and chocolate for the last couple of weeks, and I want to go and continue that work today. And we're going to be talking about the high cost of cocoa, the rising price of cocoa, and what might be behind it and what it means, and are in fact we hearing the entire story, and who's benefiting and who's paying for it, and who's paying the consequences for it. So just really important topic, and one that I will be following up with over the course of the next several months. Before we jump into going into today's topic, this is the homepage of the Chocolate Life. Right now, you can go there and you'll see that for every single one of the Chocolate Life Live episodes, I create a post. And so here's the post on the Chocolate Life right now. It is live. You can go in there and you can follow along. So you've got links to watching this on YouTube and LinkedIn and Facebook after the fact, if you want to, and also resources that I talk about, introduce in advance. So there's an episode overview. So this is what I'm going to be talking about. And then there are going to be some links and some resources that you can review after the fact. I'm going to be going through most of them here. I may be introducing some other ones during the course of the live stream, and then I will update the post to get those links in. And before I jump into everything, I want to thank the sponsors of today's episode, which are the members of the Chocolate Life Live. If you're not currently a member, you can go to the Chocolate Life and join, become a member. There's always a free membership. Premium membership is always appreciated. And while you're watching, especially on YouTube, go give us a thumbs up on the video. So like the video, and if you can, subscribe to the Chocolate Wire channel on YouTube, where you will find all of the episodes of the Chocolate Life Live. So just want to do that. So let's dive in. What is today about? So on LinkedIn, I am connected to a gentleman who is the head of the Ghana Cocoa Marketing Board in the UK. And let's zoom in on this so we can look at this a little more closely. And what Mr. Muhammad Abubakar posted, and this is 2 weeks ago, is the London cocoa futures prices to post the highest record ever. Right? And there's a little bit of information about this. And then there is, in fact, this graphic, which shows the price of cocoa. And that's an interesting claim. Are these the highest prices ever? What do these prices mean? Right? So, for example, are these just constant dollar cost, or are they adjusted for inflation? Right? And so what are some things we might learn from taking a look a little more closely at these claims, and what are some other things that are going on? So one of the things that has come to my attention since then is this post. It is on Confectionery News, and those of you who have are regulars here will know that when it comes to Confectionery News, one of the challenges that I have with the way they report on things is that they never cite sources. So they're reporting on press releases, but they actually never cite the source of the press release. And so you have to work really hard in order to find out what the sources are. But one of the things that we'll do here is we'll say, okay, the president of Ghana, in response, in part, to the increase in prices, right, so has done a couple of things. Number one is he's told CocoaBod, you need to increase the farm gate price. Yay, right? So farmers are earning more. when the price of cocoa is going up. That's a better thing, at least on the surface. We need to look really, really closely at that. But for a couple of reasons. Number one is to combat smuggling, right? And to combat the weak price of the Ghanaian currency, the cedi. And the change in price that is being paid to the farm gate is not as a way for the farmers to capture more of the historically high prices that we're seeing on the market, which is, I think, an interesting nuance, right, that we need to go and talk about here. Because what has the weak cedi got to do with anything when we go and look at it? But on the surface, what we do is we find that the government of Ghana has instructed COCOBOD, which is the authority which has the ability to set all prices for buying and selling. They have to increase the farm gate price up to a little over 20,900 cedi from last year's price, which represents an increase of a little bit more than 63%. So 63%, pretty huge increase in price at the farm gate, right? And okay, but what we want to do is, why are we doing this? I mean, right? And part of it is that the exchange rate. So there has been inflation and other macroeconomic factors, which have led to the fact that the Ghanaian currency is not as strong as it has been in the past. And so that when I'm doing the currency conversion in and out of Ghanaian money, that the Ghanaian currency is at a disadvantage, right? And then there's always a challenge associated with taking, if I am in this part of the world, Ghana, Cote d'Ivoire, Nigeria, Cameroon, there is a tendency for cocoa to cross the border, to be smuggled across the border and to go to the country where the prices are the highest, if it makes logistical sense to be able for the farmer to be able to do that. And so, okay, so this is a little bit of the larger context that's going on here. The Ghanaian farmer is not, or the Ghanaian president is not raising the price of cocoa to be able to enable cocoa farmers to capture a larger share of the increased price of cocoa. That's not why this is being done. Right? What they're doing is they're saying, well, the Ghanaian currency has slipped over the course of the last year, and so we're going to make up for that a little bit. And in part, we're going to do that because we want to make sure that we're not smuggling cocoa across borders, so that Ghanaian cocoa gets on the books as Ivorian cocoa. That's a little bit of the context here that we need to be aware at. Reuters did a similar kind of take. Not entirely certain as to, again, where the sources of this come from and whether the sources for this Reuters article are the same as the sources for the Confectionery News article, because they're not linking to sources. But there's another data point here that we talk about, is that the reason why so they're talking about Ghana raising the farm gate price because supplies are tightening. And I would say that's not why the farm gate price is being raised. The farm gate price is being raised, as the Ghanaian president says, because of the devaluation of the currency, inflation, and to combat cross-border smuggling. But one of the things that we're looking at in terms of why is the overall price of cocoa rising on the exchanges is because there is a forecast that this year's harvest is going to be significantly below before the harvest that has been forecast. So the price on the exchanges is built on an expectation of supply and demand. And as supply changes, as demand changes, the price changes. And so the actual reason it makes sense that the price is rising is because it is assuming that the supply of cocoa is going to be low relative to the demand for cocoa, and therefore therefore the price is rising on the exchange. And that makes sense, but it's not the reason why the president of Ghana is hiking the farm gate price. Right? That's not why they're doing it, at least as evidenced by this article in Confectionery News, which talks about what's going on, right? with what the Ghanaian president is giving as reasons for raising the farm gate price. Now, so what are we going to go about doing? How are we going to go about sort of fact checking that kind of idea? So the first thing I want to do is I want to go and look at a couple of sources for the price of cocoa. So this link is in the page right now. It's from a site called Trading Economics. And what I can do is I can go and look and say, what is the price of cocoa over the last 50 years or for all the years that they have trading data for. And one of the things that you see here is that this current price, right, which is way over here on the right, let's zoom in a little more, the current price of cocoa, and this is in US dollars, by the way. So it's important to know that this is US dollars, not Great British pounds. There is a difference between those two. But what we find is that the current price does not come close to the world record price in 1977. But this is in US dollars. So we can go take a look at the global cost of cocoa. We're looking here is the St. Louis Fed. This is a US government source. And what we can do is we can see, the price of cocoa, and this is in constant dollars. So what we're not doing is we're not seeing the price of cocoa as adjusted for inflation. And so we're not getting the full picture here. Now, why is, are there some other places where we can go? And, there are hundreds of places we could go on the internet to go search for this, but, let's do a quick Google search and let's look at this website called Index Mundi. And so here is the US price for cocoa. And currently I'm set for 30 years. Let me go and set it for 20 years. And one of the reasons why I'm doing that is that I know, because I've done the work already, that when I switch to pound sterling, that what happens is the data for pound sterling only goes back 20 years. It doesn't go back quite as far. Now, what I did, because I am, through the magic of downloading two, I was able to put the two charts, one on top of each other. And what you'll do is the brown line is US dollar price. The green line is Great British Pound price. We're looking at the same 20-year period. So from August 2023 or August 2003 to August 2023. And what you'll do is you'll see here is that the price of cocoa in US dollars, and let's call this the New York exchange price, and the price in cocoa in pound sterling, Great British Pound sterling, we'll just call it the London exchange price, do not track one-to-one. And so as we look at claims about cost, we need to be very, very aware about whether we're talking US dollars or we're talking about pound sterling, or even when we're talking about Swiss francs, right? And if I was really concerned about this, not really concerned about this, if I had the data, is probably a better way to put it. If I had access to the data, what I'd want to do is I'd want to say, okay, how does this track with the Central African franc, which is the Ivorian currency, the cedi, which is Ghanaian currency, and put all four of these prices on the same graph. Maybe put Swiss francs on it, so 5. And so we can see how these things track or don't track. And what we see is that there's a general correlation between the two prices, US dollars and Great British pounds. But what we see is that often there is a significant difference in price. We're sitting over here, and we look at this and we go, oh my gosh, this is why big cocoa and big chocolate companies have trading desks. So what they're doing is they're working on complex trading strategies and hedging strategies, which work between the price of cocoa and foreign exchange. Right? So what is the difference between the US dollar and the Great British Pound, independent of the cost of cocoa, right? And how is that different from what is going on in terms of the Central African franc or the cedi or the Swiss franc? And so what they're doing is they're going and saying, what is the currency that I can purchase this cocoa in, which is most advantageous to me? So where's the exchange rate benefit me, right? And what we do is we see a lot of spread here, right, which enables a very, very astute trading desk to be able to go and say, oh my gosh, there is room. And even if there are small fluctuations, in the matter of a couple of pennies, when you're talking about thousands of metric tons, it can add up to a huge amount of money for these companies over the course of a year. So it's really, really important to understand the complex interchange between the farm gate price of cocoa, what the export price of cocoa is, the FOB price, whether you're at Accra or Abidjan or someplace like that, what the exchange prices are, and how those prices all relate to each other with respect to whatever currencies are being used to transact, right? The particular buying and selling of the cocoa. Really, really, really important to be able to go and take a look at all of those things to figure out what's going on. So I encourage everybody to go take a look at it. So one of the things that it makes sense to look at, right, is to go and say, okay, let's go take a look at the Ghanaian cedi. So let's take, this is the official currency of the government of Ghana. And what we do is, if we look at this over the course of the last, 6 months or so, we'll see that the cedi has changed between, or has fluctuated. Better way to think about it. The value of the cedi has fluctuated within this narrow range of somewhere between 10.5 and 11.5. We'll see it here. And at times it's been much higher, right? And it's been lower. But if we go and stretch this out over the past year, what we find is that, roughly 9 months ago, the value of the cedi was at around 8 per dollar, where now it's around 11 per dollar. And that's a 40 some odd % increase. And so when we see the farm gate price increase in Ghana, what they say it's up 63%, most of that increase in the farm gate price, in terms of a purchasing power, right, actually has been eaten up by the reduction in the value, right, in the exchange rate between the cedi and the US dollar. And this is just between the cedi and the US dollar. I could go in here and look at this between the cedi and the Great British Pound, the pound sterling. I could look against the Swiss franc, and I could actually get, fairly simply, I would say, listen, today what I want to do is I want to purchase in I want to denominate my purchases in pounds, or today I want to denominate my purchase in dollars, right? Or 3 months from now, looking at my forecast models, I want to be able to denominate in these things. And chances are I'm doing all of these things simultaneously. I'm hedging the foreign exchange rate. I'm hedging on the price of cocoa. I've got futures contracts on every market. I'm, the equivalent of short selling in some place and long selling in other places, in order to make sure that, man, I am covering my risk every way possible. And this is, just doing business for big cocoa and chocolate companies. This is what they're doing. But when we look at what it is that the Ghanaian president has said, right, about the weakening cedi, this is what he's pointing to. I mean, this here is what he's pointing to. The value of the cedi with respect to the US dollar is now about 40% lower than it was 9 months ago. At the same time, the price of cocoa has gone up by more than 50%, right? And so under the previous cocoa bod contract, the farmers in Ghana were not able to capture any of the increase in price on the exchanges. And it's not clear how much actual value is delivered into the pocket of the farmer, right? Because as we can see just from this one chart here, that the value of the cedi has diminished by roughly 40% in the last 9 months. And I would need to do the same thing. Whereas the Central African franc, which is what Ivorian cocoa is traded in, what is the naira? This is Nigerian. What are they traded relative to this? So you can imagine it's a really, really complex kind of notion to be able to figure out what's going on. And what's I find also interesting is if we go, for example, I believe it's in trading economics. No, that's not. There is one of these websites where what I can do, I wonder if it is the Index Mundi. Yeah, what I can do is I can go compare this with what has been the cost of gasoline. So I can say, where is the cost of gasoline right? How is it tracked the cost of cocoa? In this case, in terms of pound sterling for as long as they've done, and what is the cost of sugar, and how is it changed compared with things like this? It's a really, really fascinating exploration, but it gives you an idea about how commodities exchanges reflect this hedging strategy, reflect the market's attitude towards things, not necessarily, and it doesn't necessarily represent the full picture of what's going on. So, what I want to do is I want to go back here. I want to go look at Mr. Mr. Abu Bakr's little chart here. And what we're saying is in 1977, he's saying that the highest price ever paid for cocoa was 3,150 pounds sterling. We're at 5,000 pounds sterling, or 5,000 US dollars. And we've just hit, we're looking at roughly 3,000 pounds sterling in that price range right now. So if we just look at this graph, what we're doing is we're seeing, oh my gosh, yeah, these are in fact what look like record prices. I mean, are they in fact really record prices? And what I want to do is I want to go and take a look, and let's look at Great British Pounds, although I have a Great British Pounds inflation calculator and a US dollar calculator here. What we'll find out is that if I were to go change the start year to 1977, and we're looking at that 3,150 pound cost, which was talked about in 97, adjusted for inflation, right? What we find out is that cocoa should be selling for 25, just adjusted for inflation, that 33,150 pounds per metric ton in 1977, just from a straight inflation perspective, should be 25,000 pounds. And yet it's only hovering in the 3,000 to 4,000 range. Right? So is it at a record high? Yeah, if you're looking at it in constant dollar cost, it may be at a record high. If we're actually looking for it adjusted for inflation, then the answer is maybe not. And again, it's really interesting to be able to figure out what that works. So we're looking at the Great British Pound. The average inflation rate for the Great British Pound has been about, let's zoom up on this. The average inflation rate for the Great British Pound has been about 4.6%. I don't know in what country this is. So this might be the average rate of inflation from 1977 until today has been 4.6%. It was a 15% in 1977, right? And it was 10% in 2023. Right? So this looks like it might be the UK, just from trying to keep track of things in terms of understanding inflation. Certainly, when I go to the US dollar calculator, and we'll zoom up on this to make it a little easier to see, what we'll do is we'll find that, yeah, US inflation rate right now is around 3.2%, and that the overall inflation rate for the average inflation rate for the last 35 years, actually 60 years, roughly, is only 2.5%, where the cumulative price is 70%. This is very different in terms of understanding how the consumer price index, how the inflation rate has changed from 1977 today, but also how it's a difference between the US dollar and the British pound sterling. And then I could do this same thing for Swiss francs, which is another major currency. And I would also like to do the same thing for Guinean cedi, for Central African francs, so to be able to understand what the rate of inflation has been on a yearly basis, what it has been cumulatively, to understand, right, the high cost of cocoa. And one of the things that comes to me as a result of this is that no, right, we are nowhere near, right, a global high price historically for cocoa, if what we do is we even scratch just a little bit below the surface, right, and start thinking about what does inflation look like. what has the purchasing power? What does it look like? If I have 1,000 SETI in my hands as a farmer, what does it buy me? What does that buy me now compared to what does that buy me 9 months ago compared to what it bought me 2 years ago or 5 years ago? If we start looking very, very closely at just at that sort of impact, what we find is that the farmer may not be any better off, right, than they were 6 months ago or 2 years ago or 5 years ago or even 40 or 50 years ago. That we should be looking at much higher prices, I would think. I mean, I'm not thinking that just looking that. I mean, it's naive to assume that the 3,000 pounds in 1977 should be 25,000 pounds this year, right? I mean, it's naive to assume that there's a straight line function there, and therefore, we should be paying 8 times now what we are paying for the price of cocoa. But what it suggests is that we need to be very, very careful in our evaluation of what we think about when we think about the price of cocoa. And what do you think? Right, I'm asking you who are watching. I mean, I haven't had any comments this morning, but if you're out there watching, let me know where you're connecting from, what part of the world you're connecting from, or if you have a question, or if you do have an economics background, whether or not you think that there's some really, really fundamental flaw in my reasoning here, whether you think that there's something that I'm overlooking in here. And what I really do need to say, and this is something that I did recognize in the episode overview, is that I had an interesting conversation earlier this week with a gentleman by the name of Paul McNamara. He's a professor of agronomics, or agriculture and economics at the University of Illinois Urbana-Champaign. We had an interesting conversation about the international cocoa diplomacy effort that I'm involved in. And Paul is the one who twigged me into taking a look at the difference in value of the Ghanaian SETI now compared with 9 months ago, and to question a little bit more closely what the impact of what the Ghanaian president has done by talking about the increase in the farm gate price in Ghana, which is something they could do. COCOBOD, is a governmental agency, and they have complete control over setting prices in the country. And which is different from the way it's done in Nigeria, which is different from the way it's done in most of the rest of the world. But it's very interesting to go and think about this, and what in fact does it mean when we read these posts, the rising price of cocoa, historically high prices of cocoa. The question is, are these in fact historically high prices in cocoa? Right? I would suggest maybe not, right? Maybe in constant dollar terms, if we just look at, 3,150 pounds in 1977 compared with, 3,000 some odd pounds in 2023. Yeah, constant dollar, right? These are historically high prices, but I think everybody would be naive to assume that the value of currency, the purchasing power of currency, what things generally cost, the consumer price index, the cost of living adjustment, all those sorts of things. There's no way to draw a one-to-one straight across the board equivalent and say in constant dollar terms, this makes any sense whatsoever to think about the cocoa market in this way. Right? And I suppose the question becomes, how do you go about communicating around this issue in a way that is clear, concise, and complete, right? As well as being accurate, so that people can quickly understand. So if I am a consumer of industrial chocolate, mass market chocolate, I can go and take a look and say, okay, yeah, no, I don't, I can take this with a grain of salt, even if they are in fact even aware of this as an issue. And there are lots of other things going on. And so the cost of cocoa, makes a whole lot of sense for those of us who are looking at chocolate and are following the industry and who care about these kinds of things. But the average consumer only cares that their cost of whatever their favorite industrial chocolate brand in their local store, is it gone up 10%, or is the bar been subject to shrinkflation, so the same amount of money now buys less chocolate? I mean, they're concerned about this in a very, very different way from where we are. But if you're into the world of craft chocolate, right? If you're in the world of craft chocolate, or in the world of what I think of as specialty chocolate, right? These kinds of issues are really, really important for us to understand in terms of, in part, how do we differentiate what it is that we're doing? What it is that the craft chocolate industry is doing, how we're paying, and how do we communicate around that issue so that we can very, very clearly differentiate. I've used that term a number of times, too many, in this particular segment, to be able to make a credible case to engage with consumers on why they should be thinking about these issues, why it's important to think about these issues. In the end, chocolate depends on cocoa farmers. If we're not compensating cocoa farmers for the work that they do, then what does that mean as farming cocoa becomes more and more difficult, as yields go down, as climate change forces perhaps the movement of cocoa or continuing reduction in yields? It's a very, very complex set of issues that need to be dealt with, and yet we're just focusing on this one little detail, which is very highly manipulatable, right? And that's one of the reasons why I am bringing it up. So I want to just do a quick shout out to Paul McNamara. So I want to thank you, Paul. You're listening here. I mean, it was our conversation on Wednesday that got me into thinking about this from the perspective that you were talking about. And you're absolutely right that I think that one of the key things that we need to hone in on, that we need to really, really focus on, is we need to be much more highly aware of what the farm gate price is. So how much money is the farmer receiving at the first transaction? So when the farmer turns over their dried and fermented and dried cocoa, when the farmer turns over their cacao, their wet mass, their cacao and baba, we need to be focusing on that price. And that price and that price and that price and that. That's where we need to be focused. And as long as we're focusing on the stock exchange prices, so the price in New York, the price in London, which is often delivered price. This is another thing that people don't know, is that the exchange prices often refer to the price delivered in the producing country. So it's the price delivered in Antwerp, the cocoa delivered to Antwerp, or the cocoa delivered into Amsterdam, or into the port of Philadelphia, or New York, or Los Angeles, San Francisco, wherever the cocoa is being delivered. It's not necessarily the cost of the cocoa as is registered as, for example, the FOB price, the price at the port before you start considering insurance and freight and other aspects of getting the cocoa from the producing country to the consuming country. So Paul specifically says, yeah, thank you. I mean, I agree with you. It is a great topic discussion. It deserves much more careful analysis. Absolutely. Those people who've been following what it is that I've been doing here on the Chocolate Life Live for the last couple of weeks are familiar with something I'm getting involved with, called the International Cocoa Diplomacy. And one of the things that we're looking to do as part of that is create something called the Open Reporting Initiative. And one aspect of the Open Reporting Initiative is to get all this data that we can from all these different sources, to be able to put them into a normalized and regularized database, so that what we can do is we can very, very quickly do these kinds of analysis. And then we can also understand what the differences are between what the FAO Stat, so the Food and Agriculture Organization of the UN, what FAO Stat reports, what ICCO reports, what all these other organizations report. So we can get some idea about, our confidence level. So we can say, what is the sigma in confidence that we have, plus or minus around the center, so that we can, as a matter of fact, do a much better job of creating policy because we have a much firmer grasp of the understanding of the underlying statistics and how other economic factors play into decisions like how much should we raise the farm gate price if we are in a position to be able to mandate what that price is. We can do it. I know we can do it in Ghana. I believe Grenada is another place where there's a cocoa association where that happens. There may be other parts in the world. So I think the key issue of interest is to look at farm gate prices versus the world prices for cocoa. I completely agree with you. Now, is to look at versus. I think we need to look at it in context. Right, so we need to look at the farm gate price in the context of the market price, and we need to also look at this in terms of New York versus the New York versus London, and then we also need to do this in terms of understanding the exchange rate and the inflation rate. So I think that it's a little more complex than just looking at the farm gate price versus the world price. Because multinational companies are going to be playing in different currencies, they're hedging on different exchanges, and all of these things come into play in terms of their being able to minimize the cost of agricultural inputs, which they need to be doing. Are marketing margins increasing? That's a really interesting question, because I think that there are a couple of places. Number one, I'm a cocoa farmer. I may be a smallholder farmer. I may be a cooperative. I may be an estate holder. So let's just say that we have these three classes of groups that are selling cocoa. So I'm either a smallholder selling to a cooperative. I'm a smallholder selling to a licensed cocoa buyer. I'm not responsible for getting my cocoa to ready for exportation, and not responsible for getting my cocoa from my farm to the port of export. So, right, so we need to do that. So the marketing margins is how much does it cost me, right, to be able to sell my cocoa. So marketing, cost of sales, there's differences between those two, but they need to be related to each other. And so, for example, if I'm a big estate holder, then I might have marketing costs which are associated with attracting international broker traders, right? So my marketing costs are going to be higher. How are those marketing costs changes? If I'm a cooperative, let's say go to Ghana and I'm Kuapa Koku, most of the cocoa Kuapa Koku produces goes into the Divine brand, not 100% of it, or do they have to engage in active outbound marketing in order to be able to sell the difference? Probably. What are those costs? Have those costs changed over the last, couple of years? Yes. If I'm Uncommon or Meridian or Darnhauer or some other small broker trader, how do my cost of buying? So I have to actually go and work with cooperatives and estate holders and maybe individual smallholders to be able to source my cocoa. So that's an area that is not very well understood. And so absolutely trying to get a handle on how those costs have changed is really, really important. Are smallholder farmers receiving a lower or higher share of the world price? I think that would be highly variable, and it depends upon who's purchasing it, number one, and from what country they're purchasing it. So part of the smuggling issue, for example, between Ghana and Cote d'Ivoire would be that if I can get my cocoa from Ghana into Cote d'Ivoire, I can sell it for more than I would be able to sell it for to a licensed cocoa buyer in Ghana. And so I think this is also a very, very highly complex issue that needs to be more clearly understood. Why is Ecuadorian cocoa going into Colombia, for example? Interesting questions, but certainly that is the case. As the world prices increase in 1 year, do producers receive more or not? I don't think there's a linear relationship. I don't even know that there is a straight line causative relationship. There might be some correlations, but I'm not entirely sure about how we would tease that out. As we had in our conversation on Wednesday, Paul, this would be an area of research that I'm hoping that International Cocoa Diplomacy as an organization is going to be able to help fund going forward, and would love to work with your university and your teams and the places that you work. I'm, part of, you do work in Indonesia. You're also working in Sierra Leone and other places. I think that there's some real possibility for outreach and better understanding there. Right. So you're not interested in the issue of, are the prices higher now in exchanges in real term compared to the prices in the late 70s? I'm interested in the market, and I understand that. I'm not only, but I am bringing up the issue of the price in the 1970s as opposed to the price now, and looking at the difference in terms of constant dollar terms and factoring in inflation, just to be able to point out that we're looking at record historically high prices on the market is something that needs to be taken with, if not a grain of salt, perhaps a bucket of salt. It's just really, really important to understand the historical context of these things around the claims that are being made, right? And that's the reason why I brought it up in the first place. Right. So I just want to make sure the answer is right now. We need to be focusing on right now, what is the market currently, what is the differential between what the market is doing, what the farm gate price is doing, and all that kind of stuff, because, right, this is the world we live in right now. But I think that, again, if we're thinking about the larger policy context, understanding the historical context, if I'm going in and I'm saying, oh my gosh, at 3,150 pounds per ton, currently that's the highest price ever, my thoughts about the price of cocoa might be influenced. But if I understand, oh my gosh, right, compared, I'm looking at the same price in the late 1970s, but when I think about for inflation, it's over 20,000 pounds, it's like maybe that might have an impact on the way I think about the equity in terms of this is what the farm gate price should be, or could be even. Right. So I agree with you that we need to focus on what it is that we're doing now, but I'm also aware of the fact that if we don't also think about this historically, we are missing a really important opportunity to be able to address concerns. And I'm going to talk about, reparations or anything like that. But just we can be focused on making better policy decisions. And you've come in here again, you were checking market prices in Sierra Leone for a ton of well-processed cocoa. It is in the range of 1,800 per metric ton. Now, that's the market price in Sierra Leone. So this is the price a local farmer might receive, right? However, the world price is in the range of 3,600 per metric tons. Are these marketing margins, or they do represent unfair market power exercised by a local trader to the detriment of smallholder farmers? Right. And so I think that the answer to the question is that these are primarily as a result of market power, which the intermediaries, the traders primarily. So not all of the big chocolate companies are in fact huge traders, right? Although there is an overlap, but it is in fact, if I'm buying cocoa at $1,800 a ton, but I'm only selling it for $1,900 a ton, I need to make it up in volume, right? And if I want to be a big multi-billion-dollar business, multinational business, I want to buy it $1,800 a ton and sell it $2,500 a ton or $3,000 a ton, keeping in mind that I might be buying at $1,800 a ton, at the farm gate, but I have the logistical costs of getting it from the farm gate to the port of export. I need to go through probably phytosanitary and pay for other kinds of tests and inspections. I need to pay to be able to inspect and then dress the container before I put the cocoa into it. Once the cocoa is in the container, I need to pay to get it from whatever the port is in Sierra Leone or Ghana or Cote d'Ivoire to whatever the destination port is going to be. So there are a whole lot of expenses from logistical expenses. So I don't know if we are going to throw those into marketing margins, right? And how we might differentiate marketing margins from profit margins from actual logistical costs. I think it's work that needs to be done. I think that, we see this image in many places of a chocolate bar, and we say, well, the farmer gets 6% of this and the retailer gets 50%. And then we see what the breakdown is. I think it's very generic. And I don't necessarily know that it is something that is directly mappable from one country to another country, or from smallholder farmers to cooperatives to estate holders. I think that they're very, very different in terms of marketing costs, logistic costs, and things like that. So, for example, if I'm a smallholder farmer and I'm up in, Tingo Maria, or even further north in San Martin province in Tarapoto, and maybe I'm 2 or 3 hours outside of Tarapoto, and I need to get my cocoa to the port of Callao and Lima, those costs are hugely more expensive than, for example, if I'm an estate holder who's within an hour's drive of the port of Guayaquil. Right. So these are things that need to be understood better and need to be factored in. And I think that, again, this is why it's important in my mind that we have a much better understanding of these things, that we can get all this data into a form where we can do better comparisons to understand what these costs are. Now, can fair trade or other premiums help reduce these margins? And the answer is, by these margins, I'm assuming what you mean is marketing margins or logistics costs or things like that. I am not a huge fan. This is a comment that came in. I'll put it later. So what I will say is that, in my opinion, that one of the challenges with fair trade, as they think about the fair trade floor price and they think about the premium model, is that the negotiation process exerts negative price pressure. So, for example, if just the basic economic structure is such that things are more expensive in Cote d'Ivoire than they are in Ghana, and I think that is in fact the case, that what happens is that I'm going in there and I've got representatives of the Ivorian cocoa industry and representatives of the Ghanaian cocoa industry, but I also have big cocoa traders and big chocolate makers in these negotiations. What's going to happen is that Ghana might say, well, I really do need 15 cents per metric ton as the premium. And the Ivorian say, well, I only need 12 cents per metric ton. What's going to happen is they're going to settle on something, right, which is an average. And then that amount is going to be applied across the world, right? Number one is that one government doesn't want to put their farmers at an economic disadvantage compared with farmers in another country. That's not going to happen, right? And so there's a negative price pressure to make sure that that premium is the same everywhere in the world, and that it is in fact as low as possible, right? So I don't think that the fair trade premium is a way to go about solving the problem. We have the other issue is that not all of the cocoa which is subject to fair trade certification. So smallholder farmers aren't paying to be fair trade certified, but cooperatives and estate holders, well, some estate holders might be, depending on your Fair Trade USA in coffee, as opposed to Fair Trade International. There's that issue is, who can be certified. But, if I'm a cooperative and I'm only selling 70% of the cocoa that is in fact fair trade certified, then I'm only recuperating my certification costs on 70% of what it is that I produce, although I'm paying fair trade certification costs for 100% of what I produce. And then the cooperative has to take on financial responsibility, right, for that difference. And so I would actually look at the fair, if we can, you talk about here about fair trade premiums or other premiums help reduce these margins. And when you talk about these margins, marketing margins, I would say in order to figure that out, what you'd have to do is you'd have to throw certification costs, the cost of being certified, number one, in the first place, fair trade, organic, whatever it is that certification is going to be. You need to throw that into the, number one, the marketing margin to begin with, those costs. And then what you can do is you can figure out what the premiums paid, right? How they have an effect and whether it's a net positive or a net negative, right? It might be net positive in specific instances, but it could be a net negative on average. It's just, I don't think there is a very simple, straightforward answer to the question. that you asked. So a valuable study, can cocoa farmer organizations countervail buyer market power? So UMN, University of Minnesota, I'm guessing. I'm going to go download this. Thank you, Paul, for putting this into the list. I will go put the link to this study in into today's post for today's live stream. The research shows that institutional dimensions of local markets, especially functioning producer cooperatives, helps determine whether producers get more of the global price or less. Yeah, I mean, I can understand how, in fact, that is the case, but the word functional is doing all of the heavy lifting there. I think that one of the challenges that we face is the notion that all cooperatives that are quote unquote democratically operated, in fact, are 100% free of any form of corruption, right? So, we can't assume that here in the United States. So I don't think we can assume it anywhere else in the world. All right, and in fact, I think that some of the, if I were to go look from my experience, if we look, for example, at in northern Peru, Cepicafe, which became Norandino, is it a functioning cooperative? Yes, perhaps. Right, they're very successful, perhaps one of the most successful cooperatives in Peru, right? In my experience, in my understanding, and I, at least again from my contact with them, which is now going back to 2015, through 2017, it's because of the fact that what they did is they had full-time professional management. So the Paz brothers have been very, very heavily involved in the long-term management of the cooperative, and have been very, very good about the kinds of financial decisions they've made, the kind of relationships they've been making, the way they have not just focused on one commodity. So they do coffee, they do sugar, they do cocoa, and other things as well. Sorry about that. It looks like my Wi-Fi disappeared on me. Hopefully everything is going to be okay. I apologize for that drop. I did turn my VPN off this morning to make sure that there was no issue there. If anybody's having a problem, put a note in the comments for me, and I'll go take a look at it. Let me know if everything is okay, if I'm back. And everything is okay. But Paul, yeah, I think that the point here being is that, yes, if there is in fact a functioning producer cooperative, that they can be very, very strong advocates on behalf of their members and do a lot more to be able to get a higher price at the co-op gate, which would then translate to higher prices paid to the individual farmers. I think that also functioning co-op makes sure that also includes the idea, not make sure, but also includes the idea that they're doing a good job of distributing, for example, the premiums that they get paid, the cooperative get paid, doing a good job of distributing that money back to their members, right? And they're not using the quote unquote profits, they're not using the premiums for self-enrichment, or in things that benefit them. So there's a whole lot of governance issues which are a part of this. So absolutely yes, I think that again, functioning governance is really important. But how do you rate, right, when it comes to cooperatives? How do you go rate the effectiveness of the governance in any particular place? And it's another level of bureaucracy. It's another level of cost associated with this. And it's going to be a real challenge to go about doing this. One thing that I think would be really, really important as a way to go about doing this is right now, if you look at Fair Trade International and you look at the way the reporting system happens, is that all of the responsibility is upstream. So that, I'm a farmer, I have to be certified, I'm a cooperative, I have to be certified, I have all these reports I need to do, and all the reporting goes up towards Fair Trade International. There is no concomitant responsibility on the part of Fair Trade International to be able to document, certify, right, the flow of money down the chain and how that money gets used and how it gets applied against the certification standards, right? So what are the points that need to be certified? How is the money that actually makes it down to the cooperative? Is 100% of them premium making it to the cooperative, right? Is the cooperative distributing it? I think that one of the things that Fair Trade International, one of the things that all certificate, Rainforest Alliance / UTS, one of the things that all of these organizations need to do is to extend their governance framework, their certification framework, to include reporting very, very precisely about the movement of money from the the final purchaser, which in this case is going to be the chocolate manufacturer, back down to the cooperative and eventually to the farmer. And without that, it's just there's no traceable responsibility in terms of really understanding, really making sure that these certification efforts, these programs are delivering the value that they claim that they are delivering. Really, really important, in my opinion. I've yet to see it. And if I were involved in any project like this, from a governance perspective, I would want to make sure that there is this concomitant responsibility, not just reporting up the chain, but reporting down the chain, however that happens. And then just a quick shout out to Mark and Yuri at Blue Fruits Chocolate in Kittredge, Colorado. Thanks for the detailed analysis. It's been a difficult question to answer when customers ask. I'm looking forward to seeing that study. Yeah, Mark, again, part of my interest in being a part of international cocoa diplomacy is working with peers, people like Paul McNamara at the University of Illinois Urbana-Champaign, people at universities in the UK and in Switzerland, the universities in Nigeria. These are places where I hope to be able to expand my personal outreach in order to engage with them and bring them closer into this project around the open reporting initiative. I think it's really, really important to be able to get a set of numbers which try to create a synthesis of all of these things and to enable researchers like Paul, who have this focus, to be able to go, oh, here's what's going on now, right? And I can understand it. And people like me who are looking at historical context can go, this is what's really going on. But more importantly, right, to allow the people who advise the president of Ghana to be able to say, here's what's going on, right? And here's how to make better policy. And to be able to enable a reference point so that journalists, perhaps the people who are writing it, outlets like Confectionery News and Kennedy's Confection and International Confectionery, and the business reporters at Reuters and places like that, have a place to go where they can get better data. And I think that's really, really important for moving forward. It's what excites me about what's going on. So we're at the end of the hour. We're just a minute or so short. What I want to do is I want to say, here's the post on the Chocolate Life right now. I've got one or two links that I'm going to add to this post before I leave, before the end of the day. So it'll be updated in the next couple of hours. You'll be able to go and see these new links that we discussed during the course. I want to thank Professor McNamara, Paul McNamara at UIUC, for his contributions. Really good set of questions, and I hope that we have the opportunity to continue these discussions going forward. Really important. I also want to do a quick shout out to today's sponsors, members of the Chocolate Life. If you're not a member, you can go to the Chocolate Life right now. Here is, in fact, the homepage. I'm logged in, so you can see it says account up here. If you're not a member and you're not logged in, what you do is it says join, and you can click and join. There's always a free membership. If you have the spare $1 or $3 or more to become a premium member, you'll support the work that I do. But there are lots of asks on our pockets these days, and becoming a free member is certainly something that appreciate support what's going on. And while you're here, before you leave, please like the video, subscribe to the Chocolate Wire channel. I would like to hit 1,000 subscribers to the Chocolate Wire channel this year, not because I plan necessarily to go and start quote unquote monetizing it, not going to start throwing ads into things and all that kind of stuff, but it's just growing the channel. So please appreciate that. Like, follow, share, subscribe, LinkedIn, YouTube, Facebook, all those kinds of places. I really do appreciate the support of everybody who's doing those kinds of things to help out. And to say, I think that this coming Tuesday, I'm going to do a show about the next Chocolate Life Live is going to be around the concept of ceremonial cacao. I've had a couple of people ask me the question about what ceremonial cacao is and what we should be looking for. It's a really, really complex topic. I've done a little bit of research so far, and there's no real consensus about what it means. And are there differences between ceremonial cacao and cacao ceremonies? That's another interesting thing to think about. And we'll have that discussion. That'll be coming up this coming Tuesday on the Chocolate Life Live. Until then, everybody, listen, thank you, everybody who's watched through to the end. Everybody, if you're watching this live, have a great weekend. This is Friday morning here in Arizona. And in the meantime, remember, please remember, if you're working with chocolate and you're not having fun, you're doing it wrong. You need to re-examine your life. You need to re-examine your life choices and have fun. And ciao, everybody.